over 900%.
It's over 9,000.
EarthFund pumps over the past few days, but is it something that you should be having in your portfolio? Time to find out. Time to get focused.
Time to get focused with Focus on Investing.
Welcome to Focus on Investing, where we teach you technical analysis so that you can get rich in the stock market. We release our videos as soon as we record them. So if you've received the notification, then this opportunity is probably still available. If you don't want to miss out on the next opportunity, make sure you go ahead and hit that subscribe button and hit that bell icon. We're on a mission to help you to get rich in the stock market. So if you want to join us on our mission to get rich for 2023, then make sure you go over to focusoninvesting.io. All right, with that said, let's get the proceedings proceeding this evening. We're starting off here with EarthFund on the daily time frame. Ticker symbol is 1EARTH US, I think it's USDT. Yeah, got US. Yeah, USDT. So this is EarthFund against Tether on a daily time frame from KuCoin. First thing we like to look at is the actual shape of price and see what kind of direction it's moving in. And we can say here clearly that price is actually bearish. We can see price is moving downwards on a bearish downward slope. All right, so we can see that price again in the left-hand side. We can see it's higher than in the right-hand side. So this is the key indicator for bear end, but we will go into that in more detail when we talk about the individual bars and candlesticks. But the overall shape of price, I would have to say, is bearish. All right, next thing we're going to look at is the moving averages. And we can see that we've got our 200 simple moving average in the white, 50 simple moving average in the yellow, and 20 simple moving average in the blue. And we see that price is clearly trading below all three of them, especially this 200 simple moving average. We can see it's lagging quite far behind. And this is because there's quite a steep decline in this price. When price declines steeply, the 200 simple moving average is the last one to catch up. So we're seeing a big gap between 200 simple moving average in price. There's a gap between 50 simple moving average and price, and a small gap between the 20 simple moving average and price at certain times. We can see that there's a leveling off that took place, maybe from around the 11th of July all the way to about the 18th of August. It's almost basically a sideways pattern. Let's draw in our sideways pattern here. We get our channel. It's a bit more clearer. Here we can see this sideways region here in the pattern. So we can see that it's not an all downwards motion. And you can see again with this pivot support indicator here resting at the bottom of these bars here, you can see it's actually framing out a sort of channel here. So we had a bearish price movement, then a sideways channel, then bearish price movement. And again here, we have a sideways channel down here again. And where do we want to go from? Maybe from about here, actually. So once we start to do a bit of markup on the chart, we can notice that it's not as bearish as it looked originally. Then I want to draw another channel here to get another bit of sideways movement. Maybe from here to here. And now we can see that, although it looked crazy bearish in the first instance, now we've kind of marked up our chart. We can see that it's actually 3 sideways, channels of consolidation and maybe 2 bearish movements. So the overall picture that we're looking at is bearish, but it's made up of bearish and, sideways consolidated movements, right? So we can see anytime price moves sideways, we can see that it gives a chance for the moving averages to catch up with price, right? So we see that initially the 20 simple moving average comes into our channel from around the 11th of July, and we can see it comes into our sideways consolidated movement. And then we see the 50 simple moving average coming in on the 29th of July and comes back into our sideways channel until we get to the end of the channel, and then we get back into bearish movement. and then we dip below our 2 moving averages again, and then we hit the sideways movement again, and that allows the moving averages an opportunity to catch up. We see the 20 simple moving average catching up here, and the 50 simple moving 50 simple moving average catching up here, and then we see another bearish drop, and then disconnect from the moving averages again, and then we see the moving averages catching up again. So it's a repetitive cycle of bearish movement, consolidation, bearish movement, consolidation, bearish movement, consolidation. But if we notice that the gaps between the consolidation is getting smaller, and the bearish movement is getting smaller and smaller, so even to the point where we've only got a bearish movement of 2 candlesticks here, so it's almost like, you know, coming to some sort of conclusion, and then that's when we see this massive spike up at the end. So again, you know, if we're talking about the moving averages in terms of an indicator, we are clearly trading bearish on the moving averages indicator. All right, next thing we're going to look at is the pivot support indicators. Pivot support and resistance, which is marked by green dashes, which is the resistance indicators, and the red dashes, which are the support indicators. And we can see as price is moving so freely, we don't get a chance to establish any levels of pivot support here, support and resistance here. But then when we start to level off and start moving sideways, we can see that we start forming levels of support and resistance. And this is why this is kind of coinciding with our channel forming here, right? So we've got these 2 channels here formed. We've got a bit of a channel here again with this resistance level. This is related to this channel. Actually, this spike here is what formed this level of resistance. This level of support has been caused by this spike. So all of these is based on this consolidated sideways movement. We drop down sideways, and then again we start forming similar levels of pivot support and resistance with our channels again. Again, this spike has formed this level, similar to how this spike formed this level, and then we don't have any support levels here. So it's really just one. So not really many pivot support indicators. Again, that's because we're moving so much, having so much movement going bearish. But again, when we do have them, it's because of the price movement is moving sideways. So you could either say it was bearish, but you know, because we're seeing price moving sideways when we're printing these indicators, and you know, we're generally moving alongside of these indicators, I would say that, you know, on the pivot support indicators, we're moving consolidated or sideways.
Consolidated with the quickness.
All right, so the next thing we want to look at is our focus on investing trend filter. This gives us an idea of whether the trend is bearish or bullish. If it's bullish, it'll be green, and if it's bearish, it's red. And as expected, we're seeing nothing but bearish price movement. Again, we see a little bit of kind of move sideways green slightly, and then it's all bearish, and then towards the end of this sideways consolidation, we have a flash of green, and then again a bit more flashes of green inside here. But generally the overall color is red, and I'd have to say that in terms of trend filter, I'd have to say it's definitely a bearish trend filter. All right, let's look at the candlestick. And you know, as expected, we're seeing, you know, it's mostly red, but to be honest, it's quite a good mix of red and green, to be honest. Even though we're getting a lot of the bearish move, price move is a lot stronger, but we do have green mixed in with that. Even when we're moving sideways, it's a lot of green and red streaks, like runs of, you know, 3 green, 1 red, 2 green, 4 red, 1 green, 1 red, 2 green, 1 red, 3 green. So we're getting strings of movement. And then even here, even though we're seeing this is quite a bit of bearish price movement, we are getting long strings of red candlesticks. And then in the sideways, we've got red and green. And then in the last channel, we've got red and green as well, until we get to the end part. And this is where it's interesting. And then we're seeing, you know, a massive breakout out of this channel. The moment price broke and closed out of this channel, it went crazy. We can see the first candlestick was here on the 7th of December. It went very bullish, and we can see that where it stopped is it stopped right at the level of the pivot support indicator, which is why these are important. And then we move up to the next one, And we can see that we've got a few levels of resistance, but price managed to break through all of them. Broke through this level of pivot support and this level, and also our 200 simple moving average. And we've seen a massive growth in price here. Let's indicate that with our arrow. We're seeing all of this price movement over the past few days. And if we were to get out our ruler and say from, let's say from about here, and see the numbers of how high it actually went up.
Damn, son, where'd you find this?
Yeah, we found this one is about 926, you know, depending on where you take it from, could be around 900. But again, another almost 1000% growth over the past few days. So definitely some massive spikes and massive boosts in the stock market. And again, it's undeniably, you know, that the candlesticks towards the end here are definitely what you would call bullish, right? So if we were to look at the individual candlesticks, I would say it's the back of the fourth. But again, over the most recent days, I would definitely say that it's bullish.
Can't beat a bit of bully.
All right, so let's go over all of our indicators. So our overall trend was bearish. Our moving averages were bearish. We're looking at our pivot support indicators. We said they were about, you know, sideways, you know, bearish to sideways. And then we're seeing our actual candlesticks actually bullish, very bullish actually. So, you know, traditionally, if you wanted to enter into this stock, the idea would be to enter bearish. It'd be to wait for maybe like a bearish run, which would be these few a run of, you know, maybe 2, 3, 4, you know, bearish candlesticks. It might be an idea to enter bearish, but we can see that, you know, this has been a spike counter to the price movement, right? So something like this, you'd have to, you know, get on a pump and dump sort of situation. So either get it when it first spikes up, or get it to ride it on the way down. So again, I would say if I was to call this chart was overall bearish, but again, the past few days has been very strong in the bull territory, so I'd have to say that the bulls win.
It's over! The Bulls win at the buzzer!
Again, opportunities like this, you want to get into them before they spike up. And if you want to learn how to get into opportunities and spot these opportunities before they break out and spike up, then go to focusoninvesting.io, where we will teach you and give you the tools in order to analyze these charts and get the information. Charts are going to blow up. You can get into them on the ground floor, and then you can ride them all the way up to the top. You can ride up this 1000% increase over, well, how many days was it? 1, 2, 3, 4, 5, 6. So 6 days increase of 1000%. Not bad, right? So if you guys want to learn how to get into these opportunities from the ground floor, then go to focusoninvesting.io. All right, if you want to learn more about technical analysis, then check out these 2 videos on the screen. Thank you for joining us, and take care.